In this video, I want to go over how I would start over trading if I was a beginner again with little to no experience, or if I was just failing to be consistent, how I would switch up my approach, knowing what I know now with 7 years of trading. I'm going to talk about strategy to trade. I'm going to talk about instrument, risk, and also very important, psychology backing certain setups. I recently did a trading journey video talking about when I started in 2016 to where I'm at now. If you haven't seen that video, I recommend watching it. I'll post a link in the description below. And basically, I'm going to go over in this video my mistakes and how I would switch up my approach to make my process more profitable in a faster manner. Before we get into the video, I recommend everybody to follow me on my Instagram at Ameritrade. The link will also be in the description below. It's a very good resource. I post daily trading recaps along with really good just trading tips and tricks that you're not going to find anywhere else. The link will be in the description below. You're missing out if you're not following it. But now I want to get into the first point. So this is a post that I wrote up for Ameritrade members, and I seriously recommend everybody to start trading the S&P 500 and the NASDAQ. Whether you trade options on the S&P 500, you could trade SPY options, you could also trade SPX options. You could also trade QQQ options. If you're an options trader, good. Any S&P 500 or NASDAQ related instrument. And in this video, specifically, we're going to talk about trading the future contracts and specifically the micro E-mini contracts. Now, why I recommend strictly trading the S&P or NASDAQ, stop trading penny stocks, stop trading crypto, Forex. If it works for you, good, keep at it. I'll never say not to do it. It's just something that I don't do. And I can only explain how I would start over with the knowledge that I have now as a beginner trader. And I would strictly focus on the S&P 500 and the NASDAQ. You can make a lot of money on these names. In fact, a lot of the traders that I personally know on Wall Street trade only specific markets because that's their niche, and they also know the personality of these markets. It works with any trading strategy you use, and because these markets are very highly liquid, in my opinion, they are easier to trade and formulate a system around. Now, since I recommend every beginner trader to be trading the micro E-mini contracts, I recommend starting with a small amount of capital when you first start out. You don't need that much money to trade futures. A lot of people pull up the futures charts, they see 3,900, they think, okay, for me to buy one contract, it's gonna cost $3,900. Which in the futures world, it's not true. Now, trading futures, you are trading a highly leveraged instrument and it requires margin. So I recommend everybody to get knowledge on margin trading and understand the risks that are involved trading with margin. Now, depending on your broker, it truly depends on the platform and the broker you use. Trading micro contracts with some platforms could cost as little as $50. Some could cost as little as $1,000, $1,500. It really depends on your broker. And I definitely recommend finding out how much margin is required for your broker. And there is specific exchange requirements that every broker must require depending on the margin maintenance. But you do not need a lot of money specifically trading any futures, including the micro E-minis, which the small amount of capital is needed to open up a position. Also, very, very small risk is involved. This is probably the benefit of trading these names, is for every 1 point move on the micro E-mini contracts, it's about a $5 increase or decrease. So if the S&P 500 moves 10 points, the most you're going to lose on that 10 points is $50 per contract, and the most you're going to win is $50 per 10 points per contract. A micro contract is 1/10 of the value of a standard ES contract. All the costs are 1/10 of the value of a standard E-mini contract. And also trading futures, it is easier to manage your risk. And it's also just easier to manage the trade with less emotions involved because there are less external factors that are influencing your position. If you trade options, not only do you have to be correct with the direction of the market, but you also need to be correct on the time of that position moving in your favor. So with options, there is a large increase of price because of a time factor. So some people, I see beginner traders can't even get the direction right. So if you can't get the direction right, what makes you think another factor you need to worry about is time itself? So going back to the risk aspect, let's just say we wanted to take the S&P 500 short. And if you trade the micro contracts, you could even chart off of the regular E-mini contracts. So let's just say we wanted to get short below this 3867 level. That was our entry. It cost us $50 worth of our margin. The broker puts up the rest of the money. That's where the risk aspect comes into the picture. However, if you implement proper risk management and you put a stop loss, let's just say at 3875, we're risking 8 points. For every single point we risk per contract, it's $5. So in this example, we're risking $40 if where I'm hovering my cursor over is our stop loss, that if we get short below this red line, stop loss above here, if we are incorrect, we know exactly how much we are going to lose if our stop loss triggers, and in this case, it's $40. Now, our target is this green line at 3847. It is a 20-point reward from our entry off of an 8-point risk. It's a 2.5 to 1 risk to reward. Our reward, if we are correct, is a $100 profit for a $40 risk. Very, very excellent trade. 1 point per contract is a $5 profit. 20 points is 100. The market sold off, hit our take profit, and we just made $100 profit on one contract. Let's just say the contract costed us $50. We could even say it costed us $500. We just made a 20% return, or maybe even a 200% return, depending on the margin requirement of our broker, in a very short amount of time with very minimal risk. And we do not have to worry about consolidation or time. We only have to worry about direction if we are trading futures, which involves less emotions for beginners. And I forgot to mention that I've recently added a full futures section at the end of the A to Z course about margin, contract specifications, and just the overall basis to trading futures. And because of these names' highly liquid natures, they work very, very well with price and volume itself. So as far as the best strategy to trade, there really isn't a best strategy, but the one that I have the most success with and one that I recommend everybody to go with is price and volume itself. It's very, very broad, but I don't want anybody to get caught up in the indicator hype. Maybe you see somebody selling an indicator, a magic holy grail indicator that's going to work 100% of the time. I can guarantee you it's non-existent. And if you've seen the video that I made about my trading journey from 2016, I lost a lot of money trying to find this holy grail or a system using the regular indicators that majority of retail traders do use. Not against them if they work for you. If they do, keep at it. But for me, they never worked for me. And I don't see how the market moves because of indicators. What truly moves the market is price and volume itself and understanding orders coming into the market. The market doesn't move up because the MACD just crossed the RSI. The market moves up because there are more aggressive buyers than there are passive sellers. So if you've been following me for a while, I am a big advocate on price and volume analysis. It's all we need to successfully trade the market. Everybody that I personally know on Wall Street strictly focuses and uses price and volume. Now, a lot of people always ask me, Carmine, how much money should I start with? Or what's a good starting capital for a small account? Or I have $10,000. What should my position size be? And here's my response. I've made a video on this and I stress this to InvestorTrade members on a daily basis. If you are new or you're just failing to make consistent profit and you're depleting your account, the best thing that you could do is trade with small size. I don't care if you have 100,000 in your account. I don't care if you got $1 million. I don't care if you got $1,000. You should only be trading with 3 to 1 contracts regardless of your account size. You do this because many people think it's easy. They think they know what they're doing. They go into the market with their life savings. They lose it all. They blow it up on 1 or 2 really bad trades because they don't have a system and they don't have an edge. And then they're depressed. They're trying to figure out what they do wrong and they're just digging the cut deeper and deeper. You build your foundation while starting small and not losing a lot of money at first. If I could save just one person from blowing up their account, then I know this video was worth it. I've seen many traders lose a lot of money when they first start out because they have a large loss that damages their account. Their emotions are heightened. They're trading with way too many emotions. They have such a large amount of money. It's their life savings. and one or two large losses takes them out of the game completely. The faster you come into the market, the quicker you are going to leave it. It's a process. It's building your foundation and then building the structure and the other parts of the house after the foundation is built. Stop rushing the process. Stop trying to avoid the necessary process involved in developing as a trader. A lot of people want to get placed over the hump, or they want to get dropped off on the top of the mountain. But to truly get there, you have to go through it first, and you need to walk the path on your own journey and figure out your own process to climb the mountain yourself. But once we understand all this, we're trading small size, very small risk. We have the right mentality of start small, build upon it. Now what I want everybody to do is understand that you start with an amount of money. Even if you have $5,000 saved up to trade, start with a small amount of size that you are comfortable losing. Now, many might not agree with this, and I don't actually fully agree with it either. However, I truly believe that you have to lose in order to win with the market. You have to experience pain, you have to experience losses, and you have to experience getting your ass kicked in order to know what does not work out for you and what does really well work out for you. That way you can implement it and scale that up. So in this period of trading 1 to 3 contracts, you are going to learn what your edge is. You're going to develop your system. You're going to learn from your wins and your losses without hurting your account. You have to lose in order to win. There's no way around it. If you've seen my journey video, I lost a lot of money. I blew up multiple accounts. And honestly, that was one of the best things that I did because I got my ass kicked. If I didn't learn from these losing trades and blowing up my account, I would not be the trader that I am right now. So I don't want anybody to think that you have to blow up an account or you have to lose in order to be successful. That's not what I'm trying to make here. I want you to lose in a manner that you could afford to lose, yet still take these valuable lessons out of it. But the valuable lessons are a result of losing a minuscule amount of your account. They are valuable lessons with not a lot of cost. I want you to look at them. However, a lot of people take valuable lessons with a very high cost, and that very high cost takes them out of the game. You want to position yourself to lose, but learn from the losing trades without it hurting you mentally, physically, and the monetary value of your account. Now, once we have this structure and this foundation, we must go through what I call the hard work period and even the smart work period. This is vital, and in my opinion, it's necessary for success. This was the one thing that I talked about in my journey video that propelled me forward and really started for me coming from not consistent to slowly building these blocks to becoming consistent. And that is journaling. This is where the most amount of work needs to get done. And we need to review our journal and dissect our trading from the inside and out. It should be our trading Bible. Now, what I mean about journaling is there are tons of other journals out there that you could buy, you could purchase. You could also even create your own Excel file for free. But there is tons of different things that we need to do. We need to know about our entries. We need to know about our exits. For example, if I'm taking a trade right here off of this demand zone, I want to know why this worked out, maybe what time of day it worked out in, what were the conditions, what were the structure of the market. I want to dissect my setups and essentially collect a database. You could also print out your charts. You go over here, take screenshot, and click print, and then have a printed out chart, annotate it right on top of it, maybe where you entered, where you exited, or a hypothetical trade scenario saying, okay, I missed this demand zone bounce, but maybe I could have gotten long above here with a stop loss below here. But you collect this database. That way you have a physical evidence that you can build your system, develop your edge, and the shortcut to figure out what works for you the best. And if you don't do this and you don't have an edge or you don't have a system, then you're essentially gambling and you're not trading and you're better off going to the casino. You need hard evidence for when certain scenarios happen. You execute because that's your edge and that's how you know what works out for you the best. You can't do that if you're just going into the market, buying and selling when you think it's right. That's gambling, and go to the casino. You need to enter and exit once you know something has worked out for you in the past, or when your system tells you to enter and exit. And the only way we can quantify this data and collect this data is via journaling, via collecting this database, screenshotting charts, annotating them, etc. Now, the next step is psychology. I'm a very, very big believer in to be successful in the market, you need to master yourself, your mindset, your mentality, and your emotions. Psychology, along with journaling, were the two main components that propelled me forward as a trader. I still do both of them to this day, and every time I do them, I take great setups the following day, the following week. I cannot stress how important it is to watch my psychology videos, to read psychology books, read about the human brain, read about human emotions with gambling, with the market, and understand that every decision that we make, most of the time, especially losing trades, is because of an emotional decision, our fear, our greed, our expectation, our thoughts. If we can think less and master our emotions, we will become a better trader. It's not me versus you. It's not you versus me. It's me versus me and you versus you. We are our greatest enemy and we are our greatest component in the market. If we can master ourselves, the next step is mastering the market via a connection of psychology. So now after we have a system, we know the instrument we want to trade, we know our risk, we know to start small, we journal all our trades, we collect a database, we focus on psychology. The next step is just getting our mindset right. I want everybody to understand that trading is the most scalable business. Start small and focus on your process. Get rid of the profit-making mindset. Get rid of getting rich quick. Focus on building that foundation. Now, how do we do this? Is by doing everything that I've been explaining and understanding that trading is the most scalable business. Once you develop your edge, once you build your system, once you have real skin in the game, that's how you're going to learn the most, is via real skin in the game. Without losing a large amount of money, you are going to learn your emotions, your mental game, and you're slowly going to develop your system. Okay, I know that once we hit this demand zone and I see maybe a large volume print come in, or VWAP is angling up while a pullback gets bought up into a new demand zone that formed on that earlier rally. Once we can collect this hard evidence and have a system that works out for us, then we could scale up once we're consistent with those 1 to 3 contracts for maybe 2 months or maybe 4 months or maybe even 6 months. Don't rush the process. Remember what I said earlier? The quicker you come into the market, the quicker you're going to leave it. If you can consistently make $50, $100, then nothing's stopping you from consistently making $1,000 or $2,000. The only thing that's different is you add another 0 to your position size. Or instead of trading 1 to 3 contracts, you trade 10 contracts. And then once you get to 10 micro E-mini contracts, you could go to maybe 1 E-mini contract. Take your time and enjoy the journey. A lot of people want to get placed on top of that mountain and they don't want to climb it themselves. But they have to realize that by them climbing it, they're going to learn so much more versus somebody just dropping them off the top. And that's kind of what I see with a lot of people joining these communities. And honestly, I could count maybe on one of my hands trustworthy people that I know in the day trading community. A big red flag, and I'm probably gonna get a lot of hate for this, and to be honest with you, I really don't care. If you follow somebody that sends out alerts via buy and sell, buy SPY puts or buy Tesla calls here, you're setting yourself up for failure. The best analysis is your own analysis, and focus on a community that is there to help you, that's very active and engaging, that all the members have the same common goals, same common interest, same common strategy. If you need somebody to tell you when to buy and sell, that's like somebody telling you I'm going to drop you off on the top of the mountain and it's your responsibility to get down. And I'm not going to tell you how to get down. But would you rather have somebody that tells you, okay, to get to the top of the mountain yourself, you got to do this. And I'm going to show you the right path to get up there. There's going to be a detour over here. There's going to be a roadblock. You got to go around over here. And that's what proper education is. Because a bad community can really set you back and not propel you in the right direction. And also, you need to stop comparing yourself to others. I see a lot of people say, oh, Joe Schmo just made $10,000 on SPY puts today. How come I couldn't take that setup, or how come I missed that? You're running your own race. Stop comparing yourself to other people, especially a monetary goal. Focus on consistently, daily basis, getting better mentally, physically, emotionally, and behind the markets. You need this screen time and experience. You are running your own race. Comparison is your recipe for disaster. And if you compare yourself to others, you want to make money like he's doing, or you want to be a millionaire like he is, you are just going to set yourself up to fail because you are comparing. Everybody is different. Everybody is on their own path, their own journey. Get rid of the money-making mindset. Focus on your process. Scale it up. Emotions, psychology, journaling, and stick with price and volume trading the S&P 500. That's how I would do it if I just started over again with the knowledge that I have now. And that's always what I recommend everybody watching my videos to do. It's what I have success with, and it is how I trade and what I recommend. If you gained any value out of this, I would appreciate a thumbs up, comment any questions, and definitely check out the link in the description below, especially if you want to join the trading community. It's a very, very active community. It is only available for Investitrade course members. Majority of the education is in the course, and the Discord supplements the lessons in the course, and everybody is looking out for one another. But peace out.